Hi everyone, welcome back to Birich. I hope you had a wonderful day and you are having a wonderful evening as you're planning to get some dinner down. As I'm recording, the market is open. The market is open negative as expected, right? As we're looking at all the IT companies are in the negative. The Japanese market is down almost 4%. Things are looking rather bleak and grim, as they say. In the positive sides of things, gold bees is up because gold is back to being above 3,000. As I'm recording, the spot price on gold is $3,008 per ounce. So I guess yesterday's worries when it broke and went down to 2,900 are behind us, because now gold is back to where it was, or heading towards that direction at least. So this is where everything stands. From Nifty's performance, if you see, it closed yesterday at 22,535, and right now Nifty is standing at 22,436. The negative pressure is on Nifty today, and it'll probably be another negative day because the Asian markets are all negative across the board. Even the bank Nifty is down as I'm recording. Investors are hoping that RBI is going to do something. There's an upcoming policy announcement, and which could influence the market direction. But these are all short-term plays on the market, because the long-term play is, of course, what Trump is doing and what's happening in the US, which I'll get to. In terms of what's happening company-wise in India, Bajaj Auto has reported monthly retail sales of 34,863 units in March, with Chetak becoming the best-selling electric scooter. So that is something for Bajaj to look proudly on, becoming the number one leading selling electric scooter. But do realize Honda and everybody are close on their heels. How long can they maintain this? We'll have to wait and watch. Tata's Autocomp expansion had made news, where Tata Autocomp System Limited has acquired an 80% stake in Artifex Interior Systems. Is one more step towards acquiring more premium space in the automotive market in the UK. Artifex is into interiors and innovative design in the automotive space. So this is something which aligns with what Tata Motors is trying to do with Jaguar, with Land Rover, and with Tata Motors. What they're trying to do, improve their look and feel of their car, which has been quite a complaint about from their consumers. And the brand of Tata Motors has always been, the vehicle is great, the company is great, but the interiors is something that needs to be looked at and worked on in terms of design. And they've been addressing this step by step. So this is in the right direction. They've taken an 80% stake in this. IndusInd Bank Financials has reported a flat deposit growth, and it's a 5.2 decline in loan growth in quarter 4, because this is all thanks to what has happened during first the microfinance, then of course with the whole issue of the accounting issue. This has all led to this, and in the short term this pain will continue for IndusInd Bank till they get clarity on who the new leadership team is going to be, and once RBI approves that, it'll start turning around for IndusInd Bank. Meanwhile, Uday Kotak has also said there is a deposit crunch threatening the bank, margin erosion, because there is slow retail deposit growth. People don't want to leave money in the bank, and that is a big problem for bank, and they're relying more and more on bulk deposits to come in. If banks are relying on more and more bulk deposits, the number of banks in India is huge, and all of them chasing after these bulk deposits is going to be a problem for these banks. And what Uday is trying to say is, retail customers are not interested in leaving money in the bank as a deposit, and this is going to lead to funding issues for the banks. So what does this all mean? All this means is there's going to be global uncertainty going forward, and this uncertainty will be there for some more prolonged time. India is a little bit insulated when it comes to these tariffs, because we have a huge domestic market which we cater to, and if you look at it in that sense, it's not going to hurt us so much. What is really going to hurt are a few companies and few sectors, which are the pharma sector and the IT sector. One, because of the tariffs. Two, because of the recession which has come in the US thanks to this. And this recession will spread globally because the American economy is the largest economy in the world. And the way things stand, China and America getting into a full-blown trade war, it is not good for anything, and especially global trade. So these are the things to keep in mind. In terms of investing options in India, I would say be defensive. Look at this defensive stocks, which I'll talk about a little later, which companies you can keep in mind if you're looking defensively. But automotive sector will have a lot of pain points till we get clarity from the government what they're going to do as far as cars coming into India goes. As you read in the news a few days ago, the European markets have started demanding that India also lowered their tariffs for European cars to coming into India. And with all this pressure looming on the Indian auto sector, we'll have to wait and watch to see what the Indian auto sector does. Yes, we can pivot, we can innovate, we can, have certain advantages being already in India. We already have factories in India, we already manufacture in India, and we have a lot of advantages in terms of cost in India because of our labor cost. But at the same time, when these new vehicles come into India, consumers, we have to make sure your products please them and appeal to them. So Indian customers, especially the premium customers, are very finicky. So Indian auto companies have to address this, which will be a key point to keep an eye on. I do think Tata Motors is still a great investment. I personally like looking at Tata Motors, especially at where the price to earnings ratio is. And in terms of the financial institutions in India, I think the banking sectors are all looking, some of them are looking very affordable in terms of price to book value, even IndusInd Bank, if you are willing to look at it in the long term and not in the short term. As far as the United States is concerned, the S&P fell by 1.6%, closing at 4,982, dropping below the 5,000 mark. And if it continues in this range, we're going to enter the bear market territory for the S&P, which is not good news. This is going worse than the COVID drop if this continues at the pace it's continuing. Even the Dow Jones Industrial Average has decreased by almost a percentage point, settling down at 37,645. That's a drop of 1,780 points of its session high. So volatility is extreme and fear is palpable in the United States. And it doesn't seem like there is any kind of strategy in what Trump and his team are doing, which is what is creating this much volatility. Tariffs are on, tariffs are off. We do not know what is going to be done. Sometimes they're saying they're going to negotiate. When countries are saying they're trying to negotiate, they come out saying they're not negotiating, that they're going to be, tariffs are set permanently, there's no rolling back. I can't understand how they can have a 104% tariff from goods from China when literally everything which they consume domestically comes from China. US is the second largest manufacturer in the world. They are not as perceived by a lot of you that thinking that US does not manufacture. US does manufacture. Behind China, they are the largest manufacturer. Only thing what the Americans manufacture are very high-end and highly engineered and highly sought-after products. They're not mass consumer products. There are a lot of B2B products which they manufacture, which the world consumes. And all the things which China makes and they make in their factories, those things are not the kind of jobs Americans want. So I don't even understand what the strategy is. I can't imagine iPhone factories opening up all across the United States where Americans are going to the factories and sitting and making iPhones. Even coal mining, I don't see all the coal mines being opened and Americans going by droves into coal mines to dig coal. So I really don't understand what the strategy is behind this, which is what is leaving a lot of economists, a lot of investors perplexed. What is the strategy? And even Elon Musk, who was very close to the administration, who was a strong supporter of this administration, has come out now trying to distance himself because after his brand has got such a beating, he has taken such a personal beating. Starlink has been cancelled everywhere. So I really don't know what's happening. So when you take all this into consideration, I would say wait and watch is the best approach. Even Apple stock has fallen by almost 5%. It's trading at around $172 right now. This explains why Warren Buffett had sold off all his positions in Apple just a few months ago. And a lot of people are thinking Warren has lost his mind selling Apple. Now it kind of explains what Warren could see, which none of us were able to see. Because he's been in the market for such a long time, he's able to see well ahead what is happening. And I can understand those of you who are a little perplexed on what is happening. Even Tesla has declined by 5%. It's trading at $221. And with the retaliation tariffs and what is happening across the globe, Tesla is going to be facing more and more pressure. I do believe in going forward, Elon Musk himself will distance himself more and more from this administration and from Doge, and he will try to little quiet going forward because the amount of beating Starlink and Tesla has taken, he'll want to definitely try and focus on recovering these losses. Ford, what they're trying to do is be strategic. They're saying commit to America. They're one of the big brands, car manufacturers in the US. So they have had an ad campaign focusing on manufacturing in the US, in the presence, and they're trying to offer discounts and trying to draw in customers saying that we're an American car, built in America, made in America, which is not true. A lot of Ford parts and sourced are from Canada, and those are all under tariffs. So we'll have to wait and watch. And in terms of volatility in the US, it is going to get worse before it gets any better. Even in the US, if you're looking, I would say you should look at defensive stocks and defensive companies, which when I talk about those companies later on, highlight which defensive companies you can look at in the US. Before I get into that, one last roundup which I wanted to give was about Japan. Japan's economy is heavily reliant on exports, and one of their biggest markets they export to is the US. And one of the biggest things they export to the US are cars, and the whole Japanese motor industry is taking a beating thanks to the tariffs which have been imposed on them. Not only Japan, even the Korean government has come out and said they're going to extend a $2 billion relief package to their auto industry to shore up all the pain they're going to be feeling from these tariffs. And that's what it doesn't make sense. You know, the Americans have a lot of things which they source from China, which can only be sourced from China. So tariffing that really absolutely makes no sense. And even if you wish to get into a fight with China, why would you want to fight with everybody at the same time? You would at least keep your allies closer to you and not tariff Japan and Korea at the same time. Funnily enough, for a long time, the Koreans, Japanese and the Chinese have not been speaking to each other about trade or anything. Thanks to what Donald Trump has done, suddenly everyone's flocking to China and talking to China. And after a long time, the Koreans, Japanese and the Chinese are talking about trade within each other, which is really interesting from a global standpoint. In terms of other news in Japan, of course, the Japanese central bank is looking at the tariffs carefully, and they've just started coming out of the long stagflation they were sitting in for 40 years. Their economy started recovering. So on the fence when it comes to a lot of things, especially when it comes to tariffs and showing retaliation to the US, they don't want to lose any momentum they've managed to capture in their economy. That is the stance from the Japanese central bank, and their monetary policy decisions is also something that we should keep an eye on. Now, in terms of the companies you should look at, if you're looking at defensive stocks in India, US and Japan is what I wanted to get to. In defensive stocks in India, if you're looking at, you have to look at the FMCG sector. Like I said in the previous videos, FMCG sector is a good sector to be in because most of the sales are domestic. For even the big companies and like Hindustan Unilever, ITC, Nestlé, if you look at them, all of them sell domestically, most of their products, and the Indian market is their primary market, and tariffs will not have a huge impact on these companies as it does on the pharma and the IT. That said, valuations also have to be taken into consideration. I feel Hindustan Unilever and Nestlé are very expensive, and meanwhile, if you are looking at defensive stocks, ITC is a great option. If you see the price of ITC since this tariff war started, while the market corrections have been huge, ITC has been a lone bellwether which has been maintaining its price range bound. This is also true with Hindustan Unilever and Nestlé. After the correction from last year to now, over the last 3-4 months, it is sitting, compared to the rest of the market, it's sitting, but I still feel they're very expensive in terms of valuations. And the other problem with Hindustan Unilever and Nestlé is, like Anand says, most of the profits which the company makes is taken back to the parent company as royalties. So nothing much is really left for investors to cheer about in these companies. So long-term growth, if you're looking at, it's something to keep in mind. But if you're playing a defensive play for the next few years during these tariff struggles, maybe you can keep that in mind. Am I putting money in? I'm only looking at ITC where I'm putting my money in. The company which I'm looking at is Dr. Reddy. Dr. Reddy is a great pharmaceutical company. Yes, there is problems when it comes to consideration of the exports and the wider market and the tariffs. And once it becomes bilateral tariffs which need to be negotiated with each country as world trade collapses, that is something to think about. But that being said, everyone still needs medicine, and Dr. Reddy makes those medicines which everybody needs. And the price points Dr. Reddy is willing to sell these medicines makes them affordable for a lot of people. So if you look at it that way, I think Dr. Reddy has a bright future going forward, especially considering what Mr. Market is valuating the company at. The other things which you can also look at are utility sectors. Utility sectors are also very safe when it comes to defensive stocks. A company like PowerGrid Corporation of India, if you want to look at, I'm not looking at it myself, but since a lot of you are wondering, what are the sector? Yes, you told us about FMCG sector. We know what other sectors can we investigate if you want to. The other is, of course, utilities. The utility sector in India has certain problems, which I've spoken about in great length in other videos about what the government does in these sectors. So keep that in mind when you're venturing down those companies. In the United States, the same is true. Procter & Gamble may be something which you can look at, and Johnson & Johnson. Coca-Cola company has always proven to be very resilient during recessions and tough times, because consumer staples, what Coca-Cola makes, is something Americans will definitely keep consuming no matter what the situation is when it comes to their economy. Of course, the utility sector in the US is also something you can look at. Something like Duke Energy Corporation is something you can investigate and see if it appeals to you, if you want to investigate those companies in the US. So it's true for the US, it's true for India. Staying in FMCG companies, consumer staples, healthcare is something to be safe in, and also, of course, utilities is something to be safe in. As far as Japan is concerned, there are pharmaceutical companies in Japan you can also look at, and also retail holding companies like 7i Holdings you can also look at to see if it makes rational sense to you if you are looking at investing there. That being said, it all applies to finally price to value and how these tariffs are going to affect these companies. What it basically boils down to is looking to price to earnings and how these tariffs affect these companies, which is what you should keep your eye close on. If you do decide to analyze them, first analyze what the effect of tariff are on these sectors and these companies which you're investigating. After you find there is a moat, some kind of protection against tariff, there's a domestic market, there's enough domestic sales and consumption for these companies, then you have to evaluate to see if price to earnings makes sense, looking at it historically and looking at it in context of the company alone in forward earnings. Like what I discussed in the weekend video, you should look at calculating it. So this is what I had for you today. I hope you found it informative and entertaining as we continue doing this trade war and the market remains volatile. My honest advice would be to keep your investments in tiffin and coffee range. As I always say, don't try to invest in great amounts and great sums right now, because you can see further volatility and further downward pressure on the market going forward, because Trump doesn't seem to be letting up on what he has, and his policy seems to be very anecdotal and very temperamental. There seems to be no real plan or long-term strategy in what he's doing, and there's a lot of internal conflict in his own team. So I would say be very careful when you're investing and be slow in your investment. Gold is also a great option if you're looking at as a hedge, but not too much of it, because gold is not a great investment option in the long term. Even Warren Buffett doesn't consume gold. That should tell you a lot if you're looking to create long-term wealth. The other option which you can also look at, especially if you're here in India, is the bond market. There are a lot of corporate bonds which offer you stability and assured in returns. Yes, it doesn't have the capital appreciation that equity can give you, but in volatile times, like my brother says, parking your funds, the two lump sums in bonds and taking their interest and applying that into the market might be a great strategy to apply, especially during these volatile times. But even in bonds, make sure you buy quality bonds and not any bonds which are just lying there on the table, and make sure the companies are very sound and the bonds are very secure if you're planning to invest in them. Thanks for watching Be Rich. I hope you found this video informative and entertaining as always. See you tomorrow as the markets open with a quick roundup of what's happening around the globe before we dive into some stocks and company news and investment options. Thank you for watching Be Rich today. Bye.